Welcome to Market News, your daily roundup. I'm your host, July 7th, 2026. What a day. Let's cut to the chase. Apple took the top spot as the world's most valuable company, pushing Nvidia off the throne. And in the same breath, Nvidia dropped a $5 billion check to invest in Ilya Sutskever's AI startup. So Apple is number one and Nvidia is still trying to catch up with cold hard cash. That is the tension of the day right there. Let's start with Apple. The stock has been rallying ahead of earnings and it's now nearing record highs. Apple overtook Nvidia on total market cap, and that pre-earnings momentum is real. But here is the thing that everyone is debating. Apple is spending a fraction of what its rivals pour into AI. We are talking about Google, Amazon, Microsoft, Meta, and Nvidia dumping roughly $700 billion collectively into AI infrastructure, while Apple barely breaks a sweat by comparison. So is that discipline or is it denial? Hosts love that debate. And honestly, investors love it too. Because on one hand, Apple is profitable, efficient, and conservative. On the other hand, you have Nvidia putting $5 billion single-dollar bills into a startup led by one of the most respected figures in all of artificial intelligence, Ilya Sutskever. That is not just a check. That is a statement. Nvidia is saying, we are in this for the long haul, and the arms race in AI infrastructure is far from over. Now let's talk about earnings season because this is the biggest theme on the calendar. Oppenheimer reports S&P 500 second quarter earnings growth at 70%. 70% is not a typo. That is a formidable number. And this week is billed as the busiest of the quarter. You have Apple, Microsoft, Meta, and ARM all reporting in the coming days. Add in the Federal Reserve's next policy decision and you are looking at a week that could easily move markets. U.S. futures reacted positively this backdrop, and traders are positioning themselves for the results. If you have positions in megacaps, this is the week to pay attention. And speaking of megacaps, let's talk about the technical picture because it is not all sunshine. Despite the 70% earnings growth headline, the indices are giving us mixed signals. The Nasdaq and S&P 500 both edged lower as tech stocks sold off midday. We saw Nvidia dip roughly 1% at $206 on 114 million shares traded. Intel was heavy, down nearly 8% at $92 on 220 million shares, though the data notes 180 million for the day. Let me be precise here. Intel traded 181 million shares, Apple traded 114.8 million shares, and SXDC was the volume monster of the day with 324 million shares traded, and the stock cratered 81% to 6 cents. Wild. Here is what struck me about the technical scan. Out of 10,578 symbols analyzed, only 14 came up bullish. 14. Meanwhile, 36 showed bearish signals. And here is the kicker. The 5 stocks that were bullish, DFN, FI, CCG, PRPL, and TRIB, all showing strong momentum up, were also flagged for potential overextension. That is a warning. Strong momentum, yes, but the analysts are saying watch out. These could be about to pull back. I think that is a great way to summarize the market. Some names are flying, but they are flying right into caution territory. Let's dig into the notable movers for a second. Stack is the headline gainer at 602%, closing at 927. That is a numbers game we do not get every day. BCPC jumped nearly 590% to 162. TPC added 407% at 87. On the flip side, NVVE was the top loser, down 44% at 323, RBNE dropped 44%, and FI, one of our 5 stocks flagged as both bullish and potentially overextended, crashed 40%. So you see how that overextension call plays out live. Now let's move into the other stories that shaped the day. Quantum computing stocks got a little love. RIGD Computing and related names popped. We have been seeing this sector tick up, and it is worth tracking. If you are looking at the AI infrastructure thesis, quantum is still a frontier play, but the momentum is building. Baker Hughes, the oil and AI crossover play, gapped up on a surprise earnings gain. This is the kind of story that defines the crossover themes of this era. Oil services meets AI data center power demand. The ticker moved sharply higher. On the media side, Alphabet's YouTube Premium is expanding access to Peacock. NBC Universal is teaming up with Alphabet, and the move sent CMEX up over 3%. So Google is putting Peacock content inside YouTube Premium. That is one more piece of the media consolidation puzzle. Apple's Peacock expansion is connected to the broader content ecosystem play. Meanwhile, Stagwell, ticker STGW, announced the acquisition of Q Strauss Consulting to expand Code and Theory's implementation of Adobe's suite of solutions. A smaller play, but worth noting for anyone tracking advertising and digital services. SpaceX and Tesla shed a combined $1.2 trillion in July, while Apple keeps the megacaps afloat. That is the chart of the day headline from Yahoo Finance. Apple is currently acting as the anchor, keeping a lot of the broader megacap index steady. ARM Holdings is another name worth keeping on your radar. The stock has fallen 28% over the past month ahead of its July 29th earnings report. Wedbush also tweaked its AMD price target ahead of AMD's own results. So chip stocks around earnings season are full of opportunities and risks. ARM at that discount level before an earnings print? That is either a setup or a value trap depending on how you look at it. Wedbush also tweaked AMD's price target ahead of chipmaker results. And Intel, we mentioned the volume, but Intel reported results that actually looked solid on the surface, yet the stock still fell. That is a story we hear more often now. Good numbers, bad reaction. The market's bar is set impossibly high. Let's also touch on a few things on the fringe. Strategic Value Partners Fund agreed to acquire a minority stake in Southfield Energy with a natural gas ticker. Natural gas as a theme is not a major mover today, but it is worth putting on your radar as energy plays intersect with the broader AI power demand narrative. We also had the oil and AI crossover story, with Baker Hughes really making its case. As data centers eat more power, you need people to build, maintain, and optimize the infrastructure. Baker Hughes sits right there. And of course, the Fed. The Federal Reserve's next decision headlined what Oppenheimer is calling the busiest week of the quarter. We all know the market has been navigating around rate expectations, and any update from the Fed combined with mega-cap earnings is a recipe for volatility. If you are hedged for next week, good. If you are not, maybe get ready. Let me circle back to the $700 billion question. Apple's competition is spending big. Google is spending big. Amazon is spending big. Microsoft, Meta, Nvidia, all of them are in the hundreds of billions. Apple's approach has been more measured. And right now, the market is rewarding that measured approach with a top spot on market cap. But the real test is going to be whether that conservatism pays off when the earnings reports come out over the next week. If Apple's AI strategy is holding up, that $700 billion spending gap may not matter. If it is not, well, the debate gets a lot more interesting. So here is our episode summary. Apple is number one and Nvidia is investing $5 billion in AI as the arms race intensifies. S&P 50 earnings growth sits at 70%, but the technical signals are mixed with only 14 bullish signals out of 10,000 analyzed. Tech stocks are down for the midday, and we have a week loaded with mega-cap earnings and the Fed decision coming up. Thanks for tuning in. This has been Market News on July 27th, 2026. See you tomorrow.